Good evening. This is Ken Long from Tortoise Capital Management. It's December 19th, 2010. I want to go through the weekly reports, the daily report from Friday, and then look at some charts of interest as part of our weekly market commentary. Starting with the weekly, we're in bull quiet mode. We're at the high end of normal on the annual basis. We are at 90 or overbought on a 10-day basis. The 200-day moving average stretch percentage is 9.76. That's in the green. That's bullish. Slope of the 50-day moving average is 0.76. That's also bullish, and it's also green. So that's exceptionally strong. ADX continues to rise, 22.7, so there's still more room to run as the market leaves behind the trading range. The ATR percentage of the last 100 days is at 0.90, which leaves us in quiet position. In quiet condition. U.S. is continuing to dominate the rest of the world's performance. We will see that in the ETF2 report shortly. The ETF2 increases its exposure from 50% to 70%, which means we can buy two new positions. The two indicated are IWO, which is U.S. small cap growth, and then EWT Taiwan, which has just an outstanding chart, unlike the rest of Asia, less Japan, which is really suffering. No change to the rotation, the monthly rotation model. We're still in MDY, the Qs, and IWM, a very good place to be. The market health check, you can see we're looking at the 10, 20, and 30-day time frame. All the horizontal lines are support levels. The market has pulled back to the 20-day moving average, which is right in line with the 30-day regression line. And that's still a measured pullback. It's had 4 days of pulling back and no signs of panic selling. ADX is at, we saw before, 22.5, and green over red, meaning we have a bullish move continuing. Next support levels 123, 121, 118, 116, and then down here at 114 at the 200-day moving average. Williams percent R, we have been overbought for 2 weeks and have just dipped back into the range of high normal. That's a very favorable looking market. The ETF regional report from the world market model. You can see that IWM is dominating the rest of the world's major indexes in average strength and consistency, and really quality too. And all of the U.S. is very strong. So small caps, mid caps, techs, and the large caps all dominating the global indexes, with 3 indexes red on the 5-week rate of return. That puts us at 70% exposed, 30% cash in the market model. The areas of strength are, again, U.S. small and mids, and the areas of weakness are the European and Euro-Asia large caps, so that's IEV and EFA are suffering. In the benchmarks, as we close in on the end of the year, the ETF2 is doing pretty well at 113. 0.35, so 13.33%, a couple percentage points ahead of the S&P. In the rest of the expanded look at the world market model, we've added in the usual suspects plus semiconductors, which are the strongest areas in technology, and the blended commodities are still all doing fairly well. Basic materials have been very good, and that is relying on strength, I think, in the precious metals and the basic metals. World market model, once again, you can see the U.S. materials are dominating here. Utilities across the board globally are suffering. Industrials are in a close second behind materials. You can see anything U.S. small cap is dominating. Mid cap growth in the U.S. is still doing well. That's the VOT ETF and ETF2. The VOT gets you mid cap growth. Taiwan is the unusual exception in the Asian countries. You can see it's doing superbly, whereas the rest of Asia and Asia-less Japan are getting crushed. Europe, nothing much to choose from except Sweden, which is the leader in the clubhouse in Europe. The 100-200 crossover system, basically nothing short anymore. The strength in the markets are reflected in all the buy signals, and you can see the U.S. and the sector spiders are doing really well. Financials are still lagging a bit. We're going to see that there's a max pain opportunity developing in some of the large caps in finance here in a few minutes. The top 30 ETFs based on the ETF2 report is dominated by commodities and metals. So you see a couple iterations of silver, the Rogers Commodity Index, the agriculture, metals and mining. Taiwan, here's that anomaly again. Let's see, we have internet, which is growth. We have a Russell 2000 growth. Chile continues to do very well. This was a good rebound week for Chile. It had started to lag. It never really sold off, and it was starting to lag performance, but this week it turned around and resumed its growth. Small cap growth, a couple variations of that. Oil index, agriculture, grains, mid-cap growth, oil and gas. There's a pattern in here I hope you see. Copper, micro caps, small caps, semiconductors, energy, micro caps, mid-cap growth, so that you can see in a nutshell that it really is asset allocation and it's sector performance right now. Among the ETF liquidity, the top most liquid ETFs, the ones in green are the ones that are the most volatile intraday for shorter term traders. Brazil, treasuries, gold, miners, oil service, and oil, all doing very well. And again, IWM trading slightly more daily dollar volume than the NASDAQ, but you can see the top 5 or 6. The spiders, small caps, the Qs, emerging markets, gold, finance, Brazil, and then Euro Asia. In the ETF2 report, this is the detailed look at ETF2. We went from 50-50 exposure to 70-30, meaning we were allowed to buy 2 new positions. We have owned silver and sold it in the last 30 days, so we can't buy that. Same thing with RJA, the agricultures. We already own the metals, and so the first thing that we can buy is EWT Taiwan, and then there's not much to choose from between the Internet Index and the small cap growth, so I elected to go with the broader index, the IWO. So those are the 2 positions that we'll be adding this week, and we're still comfortably ahead of the S&P. We're roughly at 50-50 in terms of exposure, so we'll be able to add 2 positions. That'll bring us up to approximately 70% exposed, and you can see from the an extract from the database that everything we own is still well into the green, and there's nothing negative on a 5-week rate of return, nothing in the yellow on the strength, and so everything that we currently own is a hold, and then the 2 additional buys, EWT and IWO. To reiterate, adding a new position in EWT Taiwan and IWO U.S. small cap growth. So that's a quick look at the weekend report. The dominant themes that should come out of there is U.S. in the lead, led by smalls. Anything commodities is solid. Emerging Taiwan is starting to emerge from Asia Pacific as a leader. The energy sector is doing well, and then we slightly increase our exposure to 70-30 this weekend. So that's the weekend report. Thank you very much for your attention.